Hi, Adam here from Future Set Mortgage Broking. Hope you're doing well. It's Friday. We're bringing you those mortgage tips where each week we try to debunk some of the myths and explain some of the jargon when it comes to mortgages and property finance. And today my topic is if you're a homeowner, do not go and shop interest rates online. Now the reason for that is when you go online, you it's very tempting to see other lenders or offering better rates than what you're currently on. And you might see adverts on side of a bus from ANZ or Westpac or wherever it might be. And one thing to obviously when you're looking at those rates is just to be aware that those rates apply to a certain situation and a certain scenario, one particular scenario. And everybody's scenario is totally different. Every time I write a loan for somebody, their scenario, what their requirements are, what their goals are, is always different. And that's what essentially affects the rate. So obviously there's the difference between fixed rates and variable rates. Those rates are different depending on what your preferences are. If you're going on a principal interest or interest only rate, they'll be different again. Obviously interest rate only rates are generally higher than principal interest rates, so things to consider like that. There's also things like are you going on a package loan or a basic? So do you need things like offsets and additional features? Again, the rates between basic packages and basic loans and package loans can be different again. And one of the key drivers to the rate is the loan to value ratio. So if you say you're looking to purchase a property at say $1 million and you're doing a 90% loan, so you're borrowing $900,000, that rate will be different if you are doing a 50% loan to value ratio. So if you're looking to purchase a $1 million property with a $500,000 deposit and a $500,000 loan, your rate will be lower. So it always really varies. So the best thing to do is to work out which lenders can give you the options or the features and the loans and all the requirements, the cash out, equity release, whatever it might be, which lenders can give you what you need. Once you've established that, you can then say, well, look, I've got 2 lenders that are available, I've got 20 lenders that are available, and at that point, you can then say, of the 20 lenders I've got available, who can give me the best rates? And that's how I would approach it. And that's why you generally would go to a mortgage broker to do that work for you. Because like I said, for yourself, if you jump online, you're not going to look at every policy across 50 lenders and work out who's got the most features to suit your requirements, and that's going to meet your strategy, short term and longer term. So yeah, it's really important to understand that, and then once you know what your options are, you can then focus on the rate. So that'd be my advice. Speak to a mortgage broker, understand how many options you've got, then focus on the rate. If you'd like to speak to me about refinancing, purchasing property, and obviously looking at all those features, looking at the bigger strategy, and then looking at the interest rates, feel free to click the button or link below, book a time for initial chat, and we can get your free assessment underway. But for now though, have a great Friday and a great weekend, and I'll chat to you soon.